Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and look at hotspots in the markets for today, Wednesday, May 25th. My name is Todd Rich. I am with Nadex. With me, as always, the CEO of Keep Trading Simple, Brian Caprice. What are we going to be looking at today? Well, one, we are going to be talking a little bit about commodities today. We've got nat gas taken off. Nat gas is one of the movers, so that is certainly a hot spot in the markets today. We know why nat gas is going higher. It is a supply and demand driven product, and we know that we've got supply challenges globally, and so we're seeing volatility in those markets. It is continuing to occur there. We'll probably take a little peek over at gold as well. Then in the equities, really what people are going to be talking about a lot today is we're waiting for the Fed minutes. They come out today at 2 p.m. Eastern, 1 p.m. Central. When we get those minutes, we're going to get a little bit of a glimpse into what the Fed is thinking in terms of what their stance and their urgency on the inflation situation is and how aggressive they're going to get at it. There's a lot of commentary in the markets today that we're not going to see inflation come down until either the markets get smoked, which means people will simply have less money to spend because the wealth will be crushed, or the Fed does something about interest rates and jacks up interest rates. So it's a dance, and we are waiting for those numbers. What we're seeing, equities opening slightly lower this morning. Again, I would expect to see people taking a bit of risk off in anticipation of some fairly significant or potential significant volatility today and through the end of the week with some inflation numbers coming in. We got the number on Friday still, PCE, personal consumption expenditure, the Fed's number one preferred measure of inflation we get on Friday, but we're going to get a glimpse into those minutes. And everyone's just sort of waiting to see how they're going to digest that. And then the markets are going to do what the markets are going to do. All right, before we jump into quickly some of the headline news and take a look then over commodities and equities, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. And, I'm going to try this real quickly. If you like what we're doing here, please, by all means, drop in a comment or give us a like on Facebook or YouTube or wherever. We do appreciate that, and we do pay attention to all of that as well, and we do appreciate all feedback. Brian and I love feedback. We want to make sure that we're doing the best that we can do. A peek over at the nat gas chart. Yeah, you can see that it's spiked up well above the $9 level. I mean, it was down. I mean, we can go back. We keep going back. I mean, we thought we were going to get a reprieve in nat gas going into the summer where people won't need it as much to heat the homes, the farms. Well, people still need nat gas, natural gas, but yeah, when the supply is going to be crimped, it's going to get kind of interesting. So Brian, yeah, I'm going to flip it over to you now. Let's take a quick peek across these headlines and then get into these charts.
Mhm. Yeah, so currency market not moving too much today. Dollar CAD is the biggest mover at 75 in the up direction. You can't really say that it is dollar strength though. It's a little bit, but you're seeing dollar Swiss down, dollar yen down, pound dollar completely flat right now, and then dollar US 50, down 57. So a little bit of strength coming in. And again, I think that's an anticipation for what we're going to see with the FOMC meeting notes. Everybody knows it's going to be a raise. It's just kind of what other language do they have in there. Now, the core global goods from this morning didn't come in well. They're expected to be 0.5, 0.6, came in 0.3, 0.4. But again, it's a confusing number because there was an adjustment last time, like the
Right.
core durable. Originally they said it was 0.8, but hey, guess what? Just kidding, it's 1.1. So again, they had to make that higher adjustment. So yes, it is lower. But again, because it was a higher kind of adjustment, again, when they follow the track, obviously it comes in a little bit lower at 0.4 because it was starting from a higher base. So the number may still be on, but a little bit off. But people will see this and say, oh, red numbers. Uh-oh, orders are down. Uh-oh, that's not good. And again, manufacturing.
Context.
Um,
It's
yeah,
all in
and
context.
Yeah, unfortunately, and it does kind of go into for those of you, you may or may not know who Bill Ackman is.
Hey.
Very, very big investor. Um, he actually made some comments. I mean, again, huge hedge fund, talking about how basically it says that what he classifies it as is raging inflation, and it'll only dissipate if the Federal Reserve acts more aggressively, or the market or the market sell off turns into a full collapse. There is no prospect for maternal reduction in I'm sorry, material reduction in inflation unless the Fed aggressively raises rates, which we know they're not going to do, or the stock market crashes, catalyzing economic collapse and demand destruction. So another big name basically saying kind of what we've been following for a while is they need to act more aggressively. They need to go stronger with it. And or the market could just collapse by itself and then they have to, again, eventually inflation gets out of control and we see everything. Seeing durable goods orders go down, I mean, I can tell you right now, I really don't go on Facebook often, but when I do, my entire kind of thing is everybody complaining about how much gas is costing right now. So again, you're seeing spending habits change, particularly around, am I going to fill the, tank of gas up? Am I going to do this? People are like, yep, we're not going to be using the boat much this year. It's kind of, people are starting to change their behaviors. And again, uh, you know, I mean, this again, aggressively raising rates is one thing, but a stock market crash catalyzing an economic collapse and demand destruction, that's nothing you want to wish upon anybody. So again, it just goes to show you it's another one of these big names that is like, listen, they're not doing enough out there. So it's important. We also had notes out of ECB. Now, this is extremely important. We've been hearing rumblings that now they are kind of moving past the Ukraine. They can't use it. Inflation's getting out of control there as well. Again, they said we have two more readings of inflation before our July meeting. They said right now we're only talking about July. We're not gonna get and talk about a schedule about raising the next four times. It's only July that they're talking about, but 50 basis points is not off the table. Okay. Originally it was 0.25, 0.25, 0.25. And now this is the second person now that says, hey, listen, 0.5 is not off the table. Why is that important? Well, last night, New Zealand raised another 0.5%. All right. And their comments were pretty hawkish. Talking about how they are dedicated, they are committed, they are going to get this inflation down between 1 to 3%. It's so far above that right now, and again, they're leading the way of all industrialized nations. You know, also out there, but not necessarily anything. And it may be why we're seeing the dollar Swiss right now down. We're showing dollar weakness in the dollar Swiss. The Swiss came out with comments just a bit ago. Where is it? Right here. That we're basically, and again, not any true substance on this one, but we're moving into an unpleasant phase of monetary policy globally. Right? Global monetary policy is moving for the first time since 2008 in a tightening direction. Again, kind of acknowledging. Listen, everybody's raising interest rates. This is important. And the question is, where does strength come next? Unfortunately, again, right now, not a lot of currencies out there, but unfortunately, it's got the VIX up a little bit and commodities are moving. Um, Oil, we're back up to 111.19, up at 1.3% on the day. Now, it did bounce off just briefly, or actually, I guess it missed by just a little tiny bit again. It would have been the new kind of level here. We talked yesterday about the 111.82. It came down, kind of pulled back up. It's holding firm up here. And again, with all the comments about we're going to block, not block, block, not block, again, I would say it's a potential area for sellers to come in. But again, remember, we do have oil inventory today. I forgot to pull the report up. We were a little bit late starting today.
Yeah, I just think it's interesting that of oil all of a sudden it's not it's trading range bound, and for oil to move a dollar when it's up at 110, 111, it's
Mhm.
yeah, the volatility for oil seems to have come in a bit even with prices this high.
Yeah, I mean, right now, the API report last night, and remember, it's not necessarily 100% accurate. They're calling for a reduction in supply. And again, it was a surplus again. I think that's the third week in a row. There's a surplus. Let me bring it back in. Let's see what the forecast is for today. Yeah, they're saying it's going to be a down draw of 2.2. And last time it was a down draw of 3.4. So it wasn't a surplus last week. It was the big surplus the weeks before that. And actually, we kind of called it this. I remember now we were calling that it was going to be lower. So they're calling for 2.2. The oil inventory report for API was down 0.7. So again, that could be why prices are moving higher. Again, showing a surplus. Is this the calm before the storm? It could, right? If it comes back up again and it's holding firm around the 111.77, it is a sell. An area. And again, we could see in turn this roll. Now, natural gas up 4%. And again, this one is taken off from 7:30 on. Yesterday, I mentioned this in the longer program that, hey, we're at a level. It's been there before. It's grinding back up again. But for me, it's not really. I'm more looking for long opportunities. If you really wanted to take a short, there was something there, but I wasn't into it. I was like, at any moment, I felt like it's just one headline away from any type of a burst higher. And again, this one literally, it jumped another 20 cents instantaneously in one 30-minute candle. So
Yeah.
for me, this is one of those things I don't, and I said it yesterday that I will be the first one to admit that when I'm wrong. I was hoping that I was wrong, but I felt like the top was not in yet, and we just blew through it this morning again. So
And there was an interesting observation that, it's even though this is a time of year where you would expect demand for oil to be coming down, supply certainly impacting it. But even if the demand would traditionally be down, there still is, and we know this is going on in the EU. They're still grabbing whatever nat gas they can, whatever's on the market, whatever they can get,
they're going to
and they're
grab everything they can. Yeah,
stockpiling it. And they're
trying
just
to. Yeah.
stockpiling it, right? You
Yep.
cool it and you could stockpile it. So
Mhm.
even so demand is still up, because, and
Yeah.
who knows at what point does the supply that's available out there just become less. The world will have to solve it, but it does push to higher prices in nat gas.
Yeah, and it's unfortunately right now too, and they're grabbing it. And you're 100% right. They're grabbing it anywhere they can. And again, they're gonna pay in rubles while they still can before it's they block it or ban it. Unfortunately, right now the ruble is at like a 15-year high or something like that. It's insane.
Yeah.
It's very very high right now. I mean, everybody thought it would be worth nothing. It might be worth peanuts, but it's stronger than it was 3 or 4 years ago. It's the same as what it was back in 2008 or something like that. It's very strong right now, so they're paying more for it than it's crazy. Not only are they paying more based off of currency exchange rates, but they're paying more because it's 9.12 versus the average what used to be like 2. So two to
Right.
2.5. So yeah, it's like a double whammy as far as kind of hurting him. And again, it's a very strange situation. Now, gold. If you attended the program yesterday, yesterday we were actually sitting right actually here, right at the kind of where the peak was, this 1870. And what I mentioned is we could hold this level when the Nadex contracts reprinted. Look to go short. There'll be some maneuvering. Here's where the Nadex contracts reprinted. If you guys can see the yellow, the orange square, or I'm sorry, circle. That's what it's called, circle. Kind of, and I can shrink it a little bit. It's basically right here. It's done nothing but go straight back down again. So if you guys were able to get in that kind of idea yesterday, you've had about a $10, $12 kind of drop in price in that one. And again, this is the market preparing for that FOMC statement. It's starting to drive it back down again, assuming that more, again, more hawkish news is coming in as far as the dollar goes. And silver, and remember, this is not so much that there's going to be a surprise that they're going to be raising. It's more about, are they going to confirm, are they confirming that it's going to be a 0.5 raise? Again, it's a huge deal, and people are underplaying this of how important the 0.5 raises actually are, especially for the next 2 times. Again, remember, bonds market and the fixed income market and things like that, they are, I mean, they dwarf the stock market, dwarf it.
Yep.
The only thing bigger is the currency market. So understand there's a lot of things behind the scenes that the normal average Joe has no idea is even happening, where companies are putting money into bonds. Both, there's a million different kind of bonds out there. There's so many. So you'll see this coming down. This is not a retail trader driven product. This is a large money driven product. And you may say, well, everybody knows that it's baked in. It is, but once these things go off, it's kind of like a checkbox. Okay, does it hit this? Boom. Okay, we're going to automatically do this. The large money is if this, then that. Once it gets to here, it makes more sense that we do this. Once this happens, this is going here. So seeing this is not necessarily uncommon, but it's down, 7%, and silver is doing the kind of same thing, bouncing off that same level. So hopefully some of you guys were able to use those trade ideas yesterday and take advantage of this $10 drop. The indices, VIX is up about 2.3%. I'll tell you right now, ES is pulling back. It didn't quite make it to the gap. We're looking for 39.73. It is pulling back, and again, in anticipation for what they're going to say today. Obviously, it's not a raise day, but it is the notes and kind of what they're letting out and what the plan is and what the thinking is. And I'm assuming they're gonna just basically confirm that, yep, it's gonna be 0.5 and 0.5.
Yep.
There are some concerns, but the problem is if we're seeing manufacturing orders going down, we haven't seen an inflation number slow down yet. So it's kind of like if inflation stays high, I mean, everybody keeps talking about this demand destruction. That's going to take an absolutely huge crash in the market for them not to do it. And the question is, do you allow the market to crash, or you raise interest rates enough? And again, they're at a tipping point right now. And again, they're not doing enough soon enough. Again, some people
Yeah.
like them, some people hate them.
And we're getting these notes again right before the Friday number. So
Right, exactly. And right now, all the indices are doing the same. It doesn't matter which one I click on. Just click on NQ. They're all down 0.3%. right? I guess I'm sorry, Russell's down 0.2, but everything else is down 0.3 and some change. And yesterday we talked about levels in here where we had again, it gapped, it based, it touched, and confirmed it, and that's exactly when it went off this morning. Had you taken this in the European session, and again, these were European session was right where this test is right here. If this is where you put your trade on, there's your 1 to 3. You're already out of your trade before the day. And right now, there is some buyers in there, but the sentiment is going to be negative because again, we're raising interest rates. Durable goods orders are bad. Bill Ackman is saying they got to aggressively, which we know Powell and aggressive don't go in the same sentence. What are they saying? He's like, there's got to be we need a market collapse. I'll tell you right now, we're not at highs right now. We are much lower. I mean, I could scroll out on this.
Well, we're near 20. We're near that 20%, which would have put us in the official bear market. So I mean, it feels like we've collapsed already.
Yeah, and he doesn't consider this a collapse yet. So we're down 20% already, and he doesn't even consider this the collapse yet. So how much more could it go? YM kind of in a similar scenario. Now it did actually break above that gap area. It went up. There's a smaller level there, and again, I'm on a 30-minute. It's a little bit easier to see on the 15. When you go back, you can see this kind of hiccup right here, right? This kind of drop base, and then a nice push out. It was 2 solid candles out. This is one of those levels where yes, we could have absolutely drawn this base here. And again, when we pulled it up, that would have been the next level when the prior one failed. And that's exactly what he hit. And again, on this failure, it pushed it to the brink, and then gapped up again, and then came up and hit it again. So technically, there's your 1, there's your 2, there's your 3. 4 is what broke it. It went through and grabbed the next one. And again, we have 3, but we talk about this too, the basing in the old zone, and that's kind of where it's set up to the downside. So, for the most part, I would expect this one probably to continue down today. Again, durable good orders are manufacturing-based numbers, which also tends to be what YM is, right? It's more manufacturing-based numbers. So, and then Russell's the small guy. Russell also came up, and again, we had a kind of the upper echelon of this peak. If you look to see where the movement went out of, kind of in this level right here, the new base, not the old one, and the confirmation, that's exactly what we ran into again in the overnight. Touched here at midnight, touched here at the European session. And again, this should have been all the way back because it hit the 78. And you can see, whoops, not that one. Maybe it's this one. It doesn't matter which one to use. Both of them are the same because it didn't come back up again. There's your 1 to 3 risk to rewards. You can see it's blown well past that. And we mentioned this yesterday. Profit taking would occur right here. And that just happens to be exactly what it bounced off of. The candle behind the surge in price. And it bounced through it and is now stabilizing. So right now, it's really between 2 levels. Again, we have a confirmation up top. That confirmation is standing right there. That should actually be red. And again, we have the downside where we talked about, 1733. So we're kind of in the middle. We'll see what it does. Drop into the 15s. Look for any additional pullbacks. Obviously, the big news this morning is out. 10:30, we have oil inventory. And again, they're expecting for a big down draw. But I think overall, what's going to happen is the market's going to kind of start to slow down. Everybody's going to wait for FOMC
and watch. Right.
And watch.
And then the reaction. A couple of quick questions before we wrap. One, is we did get a question around could the Fed raise a whole 1%, 100 basis points.
No.
They can't scare the markets like that.
Can they? Yes. Will they? No. It's too much of a shock. If they would have done it, it would have been early on. And remember how much drama there was about the 0.75. What they would rather do is kind of spread it out to make sure that if everything suddenly and if they did a 0.1 and the markets collapsed, then it's what are you guys doing? You have no idea what you're doing. If they do a 0.5, technically, yes, they do get to the 1. But if they do the 0.5 and all of a sudden the whole market collapses and we're down 7 days or 10 days of just straight 500 points down, they're like, whoa, maybe we won't do the extra 0.5. So they try to spread it out. The problem is, Matt, and it's a great question, Matt. Thank you for asking it. What makes it difficult is, again, look at the UK right now. The UK is at 9% year-over-year inflation. They have spread it out. They're at 0.5. I'm sorry, they've been raising at 0.25 4 times in a row, and it hasn't slowed it down. So
anything.
The problem is they've let it go another 5-6 months when they could have done a 0.5, and then seen where they were at. It's getting worse, and it's not getting better. But their economy, because they keep raising it, it's getting worse. So it's a very hard game that they're playing. So could they? Yes. Will they? Absolutely no. I'd say that it'd be a 99.9% chance they wouldn't do a 1. I'm pretty sure they're going to go 0.5, and then kind of see what it's doing. The problem is
because it takes a while for it to also to have an impact. It's they do it. It might have an immediate impact on these markets. You might see an immediate impact in the stock market or in FX or in commodities, but what it actually does to the economy. Remember, they're measuring the economy, and those measurements take time to actually measure, and you got to watch it changes over time. So
Yeah,
it's
anything that's associated with the rate is instantaneous, but the true reading, like I said, if they raised at 0.5 today, nobody knows any difference. If you're still in that retail sales and you're still spending, you're still going to spend if they raise it. It doesn't affect that aspect of it, which again, to get to earnings takes a little bit of time. The things that matter on that one is when they raise the interest rates, look to see what over the last 3 months, look to see what mortgage interest rates have done. They're skyrocketing over. A friend of mine yesterday posted it saying based off the average home value in 2 years, based off of what the interest rate was then versus now, there's been a 95% increase in what it costs to have the average house in the United States now, based off of what your payments are. It's insane. I was like, wow. I was like, I didn't even know it was that bad. I never looked at it, what your payment was then versus now and how much it increased. 95% increase in the average median price. So that's a big one.
yeah.
Also, I see we have another one, Ape,
Well,
talking about
yeah, and then the other thing,
pound dollar.
the other thing we want to do is, we said we bring up the pound dollar. And I know we're out of time, but let's just do a
Yep.
quick peek at the pound dollar chart.
Sure.
We can cover more of this stuff tomorrow, and
Yep.
and we will be on
Yeah.
Friday as well. So even a incentive to not take off too early for the long weekend.
Yeah, I mean, if you look at this one again, I would definitely agree. That, when we talk about weekly trades, we typically try to set those up early in the week. Wednesday is typically not the best day to talk about them or use the weekly contracts anymore because, again, they're spaced so far apart. But on a weekly basis, yeah, they're awesome. I agree 100%. Again, the UK we know is having major problems. Their next step in this, because again, they are already kind of in the recession. A lot of their data is very, very negative right now. It's not looking good, and they know inflation is still out there. So it's kind of like we can't really raise it more without kind of crushing the economy all because again, it's a fine line. They're like, how do we work? Maybe we'll just give it one more month, and maybe the interest rates will start lowering it, right? The dollar, we know they're going to raise the next two. The pound, we're not really sure. So overall, on a fundamental basis, yes, it is much more of a kind of weaker trade base. Again, it did pull back. There were some major pushes down again, and it did turn off good levels at 61.8 levels. I mean, it's touched it 3 times. There is a base there, but the other side that's holding this one up has now been touched here, basing again, and there's sellers right above. And this one, I mean, this is an easy case right here. There are sellers sitting above this one. And again, we know today they're going to confirm it. And if you look to see the rest of the week, and this is why in the long sessions, I always like to cover this, you look to see kind of what the rest of the news, what other market catalyst is there? There's nothing for the pound, right? I'm looking at the pound right now, medium, even low. If I go low, there's nothing for the rest of the week. We have one person speaking, and that's it. That could be associated with the pound. There's nothing. So there's no major catalyst to bring them good data. On the flip side, if you look to see and look at the U.S., what do we have? And there's so much up here. I got to take the yellow off. We have FOMC. We're going to confirm that we're raising it 2 times. Preliminary GDP negative, but not necessarily as negative as before. And again, that's kind of we know where that is. Unemployment claims can move it. Pending home sales, we already know this is going to be negative. Again, it's expected. It's expected to be negative. So if it's not as negative, that's a positive for the economy. And then we have Bullard speaking, which again, we got to get in front of this. Is going to be more hawkish. And then core PCE, it's expected to be positive again. I mean, forbid this comes in at 0.4. I'm assuming it does the same thing. So a lot of stuff that give dollar strength, and everything that's expected to be negative. I mean, if it's negative 1.9 and it comes in at -2, you already expect it to be negative. So if it comes in less than expected or flat, again, there's more of an ability
positive.
Yeah, I doubt it's going to come in positive, but it's kind of like the question is, did they overshoot it in that direction? Is really what it boils back down to. So I would say right now, and again, remember, this is all about odds. Do I know anything? Do I have the crystal ball? No, but there's more odds out there that we will have strong dollar data the rest of this week. For the pound, they have no chance of getting strong data. It's just going to be different headlines. And what are headlines that they're going to get? Supply chain issues. It's just negative things. Again, it's talking about inflation, recession. Everything is just not great. So and there's not even any data. There's nobody even speaking right now.
There's some stuff to definitely look for the next couple of days, particularly with the pound and with the dollar. So a little extra color commentary there. We want to interact. You got questions, chat, punch them in, and we're more than happy to to try to do what we can. We did go a little bit long today. With that, any questions for Nadex, please email customerservice@nadex.com. You have other questions, feedback, Brian and I are also accessible. And by the way, I really do. I mean, we've gotten some great feedback. We've had some very, very positive feedback. We've had some constructive feedback. I love it because, listen, ultimately, we want to be here providing the best value that we can. And the one way we know that is give us the feedback, and you can email us. My email, todd.rich@nadex.com. Brian is very accessible, and he's a great coach. If you want to reach out to Brian, please email him, support@keeptradingsimple.com, support@keeptradingsimple.com. I'm not going to recap everything we went through today. We are seeing equities open a little bit lower, mostly as people anticipate and sit and wait for the Fed minutes that are coming out 2 p.m. today. And then, everyone still is in a bit of a pause mode as we wait for the big the big inflation number this Friday. It's just interesting that we're getting that number going into the holiday weekend. We will be back tomorrow morning. Brian and I will go through a lot of this and see where we stand tomorrow. We'll be around Friday as well. So hopefully you'll join us then. And until then, thank you for joining and good luck in the market.